Nvidia versus AMD. Which is the better stock to buy? A question pretty much as old as dirt. We're going to get to the bottom of this so you know which stock you need in your portfolio. You could technically buy both, but you have to know which one to allocate more money towards for greater returns.
In the past 6 months, AMD is down about 44%, and in the past 6 months, Nvidia is down about 30%. In the past year, however, Nvidia is up 30% and AMD is down about 40%. A very large difference that we have to take into account when deciding which stock is a better buy is the market cap. Nvidia's market cap currently sits at about 2.5 trillion and AMD's market cap currently sits at about 141 billion. Now AMD is a much smaller company. Therefore, if you invest in it, you may get higher returns, but it's also higher risk. Nvidia's all-time high was somewhere around $150 per share, and AMD's all-time high was over $200 at around $210 per share. To find out if Nvidia or AMD is the better buy, we have to understand the industry of semiconductors. Taiwan Semiconductor reported earnings a couple days ago, so we need to take a look at that to see how the industry is performing and where it's headed. Now, Taiwan Semiconductor beats Q1 targets on strong AI chip sales. They reported an earnings of $2.12 per share and a revenue of $25.53 billion, which topped estimates of $2.07 per share and $25.46 billion. However, what's most important are the Q2 earnings guidance. They expect the revenue to be somewhere around $28.8 billion, while Wall Street expected it to be somewhere around $27 billion, and this is a huge beat in estimates. However, it's important to note that TSMC's outlook appears somewhat foggy beyond the next 90 days. This is from an analyst at Needham, and they gave TSM a price target of $225 per share, while Barclays gave TSM a price target of $255 per share. Currently, TSM sits at around $151 per share. To make it up to $225 per share or $255, it would be a huge jump in the stock price, which would certainly drag AMD and Nvidia with it. Now, why exactly that matters, everyone, is because TSMC creates 62% of all semiconductors in the world. And it creates over 90% of all advanced semiconductors in the world, which includes Nvidia and AMD. Now, let's compare both Nvidia and AMD's business models to determine which is the better company and the better buy. As we can see here, for Nvidia, the gross margin is around 75%. And then the net margin is 55% and FCF 46.6%. Now, if we take a look at AMD, we can see the margins are a lot worse. The gross margin is 53%, net margin 6.4%, and FCF margin of 9.3%. Now, if you were to conclude with this information, you would definitely say that Nvidia is the better buy, and the video would be over here. But there are a lot more things to take into consideration as well as the company outlooks. AMD might just be a turnaround story. If we take a look at AMD's revenues, free cash flow margin, and free cash flow over the past couple of years, you can see that it has not been great. Free cash flow is even down over the past couple of years, and this is why the AMD stock price has had such a hard time. But if we turn on projections and outlooks for the next couple of years, we can see the free cash flow and revenue both start to ramp up. Obviously, these are just projections and they can always change, but there are many different facets for AMD that show promise. And if we compare AMD to the likes of Nvidia, we can see that Nvidia is just so much better. Free cash flow margin sits at around 50%. Recently, Nvidia has had an extremely tough time with 2025. Nvidia's 2025 has been anything but easy, and it's going to get tougher. It's been mostly bad headlines for Nvidia recently. However, this was some positive news. The President of the United States put out a Truth Social saying Nvidia commits $500 million to build AI supercomputers in the United States exclusively. This is obviously good for Nvidia because they'll be able to avoid tariffs with this kind of thing. Despite that, however, it's been a difficult 2025 for Nvidia so far. Recently, Nvidia caught in the US-China trade war takes a $5.5 billion hit. Washington placed fresh restrictions on the export of its H20 artificial intelligence chips to China. A lot of people thought that this was a fine from the US government to Nvidia, but it wasn't the case. For example, this analyst says Nvidia specifically designed the H20 to comply with US exports restrictions. Now the rules changed and they lost $5 billion. They didn't necessarily lose $5 billion, they still have that inventory. It's just not going to sell this quarter, and they might have to sell it at a lower cost to get rid of it. Now, what exactly happened is that Chinese companies were buying $5.5 billion in H20 chips from Nvidia. Orders were already set in place, so Nvidia had added this $5.5 billion in guidance to its next earnings report. However, the US government put a restriction on selling H20 chips to China, and they told Nvidia that they now need a license to do so. So now Nvidia no longer has these orders to fulfill, so they don't make that $5.5 billion in their next earnings report. They did not lose $5.5 billion. They still have the inventory and they can still sell it. It just can't be to China, or they may be able to sell it to China in the future if they acquire a license to do so. Now, why this is such a concern for many people and why Nvidia dropped 10% is because China accounted for $13.5 billion in revenue for Nvidia in 2025. This accounts for about 13% of Nvidia's total revenue. So it's understandable as to why people might be selling their shares, as there are growing restrictions between the US and China. And this does not only affect Nvidia. China made up $6 billion worth of revenue for AMD in 2024. People are also comparing the chart of Cisco during the dot-com bubble to Nvidia's chart now. Personally, I think this is a bunch of hooey, but some people might want to take this into account, so there you go. Price targets from people at Wall Street are also something to take a look at. For Nvidia, currently the lowest price target from any analyst is $115 per share. So even with Nvidia at about $101 per share, the lowest price target gives it about a 14% upside. The average price target between all these analysts is $165 per share. Currently there's about 71 covering analysts, 44 say buy, 11 say outperform, 7 say hold, and 9 have no opinion. Again, very important to remember that these are just price targets from analysts. They don't actually know the future, they're just trying to give it their best guess. But if we take a look at the price chart revision trend over time, we see that over time it does typically go up along with the price. But since Nvidia has seen some downside recently, the average price target has fallen from about $172 per share to $165. And if we take a look at AMD's price targets, the lowest one out of all covering analysts is $90 per share. Currently sits at about $87.50 per share, so it's still under the lowest price target. The average price target is $140 per share, with AMD at $87 per share right now. That's quite a bit of upside. The highest price target is $225 per share, and if AMD can execute on its revenue and free cash flow estimates, I'm sure these price targets will be blown out of the water. AMD does have less covering analysts with about 50. One says to sell, one has no opinion, 17 say hold, 8 say outperform, and 23 say buy. So analysts on Wall Street are not quite as bullish with AMD as they are with Nvidia. And if we take a look at the price target revisions over time, it's not as pretty as Nvidia. So which stock am I going with as the better buy? Well, it all comes down to personal preference. Nvidia has a much lower risk if you were to hold it, but AMD yields a much higher possible return. Guys, please do your own research if you make any investment decisions. Everything I say in these videos is just a personal opinion and it's not financial advice. If you enjoyed the video, leave a like and subscribe, and I'll see you all in the next one. Peace.